Data Capital conference call number 5, July 30th, 2023. So today we're going to go over the understanding and importance of net equity to stock valuations. It's going to be a quick method on how, if you're looking at stocks that you might want to invest in, what are some things to look for, fundamentals wise, on why you want to get in. Is it overvalued? Is it undervalued? What's their assets like? What are their liabilities like? So we're going to get into that. We're going to go into my growth stock showcase, Hyliion Holdings, HYLN. This is one of the stocks we've been in for the last month or so. We've just been accumulating, so I just want to go into the nitty gritty on why we've been investing in it. We're going to get into the Dogs of the Dow. The Dogs of the Dow is the phrase. The bottom 10 stocks in the Dow Jones with the highest dividends, and it's a strategy that I learned about in one of the recent books I've read. And over time, it has actually beat the S&P 500 because mostly the Dow Jones is of stocks that have lasted a long time and will continue to last a long time. But as in life, things go up and down. So when you usually see a higher dividend, it's usually due to the fact that the price has decreased, and that could be an opportunity to get some discounts. The first Dow dog that I invested in for the data portfolio was Walgreens Boots Alliance, WBA. The second one was Verizon, VZ. And then we're going to get into the data capital dividend portfolio overview, which I'm very proud about right now. It's been doing really well, especially from the start when we've done it, started in March. And just to see the progress of, just staying the course. And now we're starting to see the fruits of the labor, where this is the first month we're actually in the positive for the portfolio. So we're going to go over the top 2 performers, the bottom 2 performers, and some honorable mentions. And then if we have any questions, answers, or anything like that, we'll go over that. So, understanding the importance of net equity to stock valuations. So net equity value is the fair market value of a business's assets minus its liabilities. The measured value is used to determine a business's net worth, or the funds that would be left over and available to shareholders if all liabilities and debts were paid off. And so this is why I like using it. If in a worst case scenario, you're invested in a company that maybe wants to get bought out or is going into bankruptcy, you can look at their net equity to see, okay, what is it really worth, assets to liabilities wise? If somebody came in, how much would they pay per share price versus the stock? And usually, if it's higher than what the price is right now, that discrepancy usually bodes well for the investor over the long term. Banks use net equity value to determine the financial health of a company. When determining whether or not to underwrite a business loan, most banks will first analyze this equation or equity value. Because this measurement weighs a business's current assets against its current liabilities, net equity value offers an analysis of how much the business is worth as a collateral for a loan. And a little bit more of a technical equation for net equity value. I like just doing assets minus liabilities, but to break it down even more, you could do enterprise value, the cash and cash equivalents, short-term, long-term investments, minus the short-term debt, long-term debt, and the minority interests. So before we get into the gematria behind it, I found a Twitter quote that I think really people need to understand, because the investing is an art form and not every situation's the same. So this is what Warren Buffett says. Valuation of a business is not reducible to any formula where you can actually put the variables in perfectly. Now, I might use this simple valuation to find certain stocks, but every stock has a different personality, has different traits, so it can only go so far, and so that's why everybody has to have an open mind about how they value a company. And from Seth Klarman, in any attempt to value businesses with precision will yield values that are precisely inaccurate. Just like life, the stock market, it's a machine that works in so many different ways. So we cannot get stuck in thinking, this is the only way to do things. What makes the stock market beautiful is that it moves because everybody has a different perspective. If everyone had the same perspective, it wouldn't be as volatile, and frankly, we wouldn't be able to get the profits and the opportunities that we can have because there wouldn't be any changes within the price. And so, when getting to the Gematria, starting off, buy stocks when the net equity is above the current market capitalization on exchange. 330 English reduction. The bottom buyout price, if the liquidation of a company occurs, net equity usually used. We like seeing 333 in English reduction. This is the purest English reduction cipher. 1 through 9 is used. So this is why we like seeing this. It's very powerful in my opinion, and that's why I continue to use the 33 permutations. In bear market, net equity used to find undervalued stocks to invest into for future gain. 333 English reduction. Again, very powerful. So going further, good stock price below net equity, 137 reduction, the 33rd prime. It's also 1,333 in satanic. In a bear market, net equity helps a lot, 137 English reduction as well. Net equity is a quick way to see stock valuations. We have that 137 in Chaldean. Now the Chaldean is the purest cipher when it comes to voice vibrations, sound vibrations. So essentially, when I read that out, it has the sound vibrations 137, which is powerful. The stocks trading below assets, 333 English ordinal. That's important because if you're doing the calculations and the market capitalization of a stock is below the assets on hand, there's that discrepancy where you could potentially get that extra gain in price once the market finally finds its equilibrium. The stocks trading below assets is opportunity, 3,300 in English Sumerian, but again, 0 is just a value placeholder, so you just have that 33 in a very ancient cipher with English Sumerian. So that's understanding the importance of net equity to stock valuations, and we're going to see this when it gets to Hyliion, one of the stocks we've been greatly investing into. So for the first slide for Hyliion Holdings Corp., HYLN, it's a growth stock. Right now, I have about 335 shares in. My average share price is $1.78. It closed on Friday at $1.82. And so I'm not really worried about the current price right now. It's more about where it's going in the future. So the industry is the hybrid EV powertrain space and energy. So it's bread and butter right now. It's gearing up to start selling systems within 18-wheelers, so they can start transferring their power systems from internal combustion engines to a hybrid natural gas engines. If they don't want to do natural gas, they'll have a section where you can do electric. So it's going to be electric and natural gas. Now, why is this important? While EVs and electric vehicles are trying to make a way in the world, it's still a long time away. There's not a whole lot of charging stations, especially for the bigger trucks. But at every gas station, you still have natural gas that you can get as fuel. So that's a nice transition as companies still try to figure out the EV charging space. With Hyliion, you're able to use natural gas as well as EV with their engine systems. Their headquarters is in Cedar Park, Texas. Their PE ratio is minus 2.6x, so it's below their earnings right now, which is what we like to see. We don't want to have a PE ratio for a growth stock like this in the in the 20s, the 50s, or anything like that. And its debt to equity is 0. They're really not in debt right now. They're not in debt at all. Their assets on hand, they have a cash burn that they have enough cash to burn for now, which is why they don't have to dilute the stock right now. And this is good for us in the short term. At least for the next 2 to 3 quarters, they have enough cash on hand to not go to shareholders to try to make more money, which is nice. And when I get into the fundamentals, the next slide, we'll see that. And just for a quick Gematria decode, good stock, 37 English reduction, and also 44 reverse reduction. Hyliion stock, 37 English reduction, 44 reverse reduction. So it has the nice gematria, really quick, really easy, and that's why when it got to these type of prices, that's why I jumped on board. Now, getting into the fundamentals of Hyliion. So the name origin of Hyliion is it's hybrid lithium ion. That's what it works with its batteries. It's like lithium ion batteries. So hybrid plus lithium plus ion, kind of like the formula, equals 332 ordinal. Now, it's not the full 333 like we like to see, but if you use the Colel rule, it's only one digit away. And so it gives us some leeway. I'm not saying it's a super powerful decode, but in this case, you could say, okay, maybe it's close enough. Again, it's a leader in electrified powertrain solutions for Class 8 semi-trucks. Electrification that leverages existing alternative fueling infrastructure. And so now the assets. So the assets for Hyliion is $418.71 million right now. And I have the fundamentals from March 31st, 2023, or their last earnings report. They're going to be reporting earnings within either, I think it's 2 weeks. I think it's the second week of August. So we'll be monitoring that to see where they're going. What's the revenue like? Are they starting to sell more of these powertrain systems? The total liabilities they have right now is only $22.1 million, which we like to see. They're not in debt. Their biggest thing right now is really just their cash burn, but they still have a lot of cash on hand to do what they need. A lot of investors are a little worried because they're not seeing sales right now, and the CEO, Thomas Healy, is always tinkering, testing to get the right system. He's a science dude, but also I think he believes that he knows the importance of getting this commercialized as fast as possible. In the last earnings report, he even said that they're really close to getting this commercialized, and that's when we should start seeing some revenues get in. But when it comes to the net equity, we're in a good position right now where the net equity is at $396.5 million. So they have a lot of positive equity right now. With the shares outstanding, it's 180 million share float right now. And so when you take the net equity divided by the shares outstanding, you get a fair value price of about $2.19. And so you could see with the net equity formulation with shares outstanding, there's a discrepancy in the price where it's at right now. It's trading at $1.82, but if we just took the net equity, the assets minus the total liabilities, what we can see right here in the fundamental in the earnings report, the discrepancy is 30 cents. And for like a penny stock like this, 30 cents is a pretty big gain. And if the earnings report comes in positive, it could shoot up over $2 relatively quickly, which is why I've been comfortable adding below $2 right now, because there's a lot of runway, there's a lot of leeway. The bears of the stock, they're worried about the cash burn, but again, that's 2-3 quarters away. I'm even though I'm a long-term investor, if the opportunity is there, say 2-3 months from now, if it's trading at $3.50 just off a pump, obviously I'm gonna take profit. And so in that case, that gives us flexibility where we don't even have to worry about them diluting the stock or not having enough cash burn. If that's only 2-3 quarters away, 6 months down the line, 9 months down the line, you have to be flexible. So if there's opportunity to profit, we'll take that. So when it comes to the Gematria, purchase Hyliion under $2 in 2023, 133 English reduction. That's a big investment number. I've talked about that a lot. With the parent number rule, you can kind of see 1 as a 0, you have that 33. I've seen 133 come up a lot in investing, and I always look towards it. Hyliion under $2 is great. 2023 purchase, 333 English ordinal. What else needs to be said right here? The matrix is telling us, is 2023. If Hyliion's under $2, it's a great purchase. Buy Hyliion under $2. Again, you see the theme here. Buy Hyliion, HYLN, under $2. 137 English reduction, 137 reverse reduction. Best energy companies are in Texas. Obviously, Texas has always been an energy hub. Tesla, which they are more energy based for electric vehicles, they are starting to get in the energy realms outside of electric as well, solar and a lot of other things. I do believe in the future they will be spinning off the car division and getting into other branches. And as we know, Elon just moved headquarters for Tesla to Texas. And remember, this is just kind of like a conspiratorial, but it all aligns. So Travis Scott, I don't know if you remember his Astro World tour that he did in Texas, where that accident happened. It had, I think somebody died, stampede. That was around the same time Elon actually moved Tesla to Texas. And when we're talking about the matrix, you have to take the overarching symbolism of what all is happening in the world. And sometimes you have to figure it out yourself. And so if you know anything about Travis Scott, he's a highly energetic, rap artist. Energy is one of his things that what people like about him. So it all connects. So that's Hyliion, and this is what I have for them fundamentally, and this is where I see going forward for them. Again, their earnings is in about 2 weeks. So if it comes in great, if the revenue comes up, I can really see the price moving up over $2 and hopefully into the 220 range, 230 range, and hopefully even not, if not even more. And if they even get a contract on a PR, then we're really going to be in business. But this is one of these plays that when it's under $2, you just kind of want to accumulate slowly and see what happens. So now we're going to get into the Dogs of the Dow. The Dogs of the Dow, again, it's the word dogs refers to stocks that have the highest dividend yield due to the fact they have a lower share price and are out of favor with investors. That's the underdogs per se. The Dogs of the Dow stocks includes Verizon Communications, Intel, Walgreens, Dow Inc., which is a chemical company, 3M, Chevron, IBM, Amgen, Cisco Systems, and J.P. Morgan Chase. So those are the 10 Dow dogs right now for 2023. And so only one Dogs of the Dow variant has proven to beat the performance of the Dow Jones Industrial Average, the so-called small dogs of the Dow strategy. Now, the small dogs of the Dow requires that investors further concentrate their positions by investing in only 5 of the highest yielding Dow components with the lowest stock price. The ordinary Dogs of the Dow strategy tells investors to purchase the top 10 highest yielding stocks regardless of the stock price. Now, the small dog strategy, especially in correlation with my dividend portfolio strategy, more resonates with me. If you know my strategy with my dividend portfolio, I like buying stocks typically under $100, typically under $50. I only have a couple stocks over the $60 range right now. And while, I have to be flexible with this, the reason why I like stocks $50 and under is because you can accumulate more shares. And if you feel like you have a company that has a potential to raise in stock price, a growth potential and more of a stock price, that gives you more leverage and more of a percentage gain. When you get into higher stock prices that are in the hundreds, 200, 300s, the percentage gain starts to dwindle very fast. And a lot of those companies their dividend yields are, a percent, under a percent. And so, depending on what your goal is, my goal is to, have higher returns. I'm young, I like higher returns. So that leads me to having smaller dog type yields. The small dogs, the small dogs of Dow strategy, 313 English ordinal. Dogs of Dow Jones perform decent, also 313 English ordinal. If you could just take off that one, you have that 33 using the parent number rule. Also, Dogs of Dow Jones perform decent, 133 in English reduction. Again, we love seeing that high-powered investment number. Dogs of Dow, good stocks with bad years, 137 English reduction. The 33rd prime. So again, we're on the Dow Jones. If you're on the Dow Jones, that means you are a pretty reputable company. You've been around a long time. They don't just allow any company in the Dow Jones. So if you're a dog in the Dow Jones, that just means you have a bad year. And if people aren't afraid of that, they can have good opportunities with good discounted prices. And that's what we like here. We like discounts. Also, I like to say Dow Jones equals 33 English reduction. So off the bat, simple 33, easy enough. Now, I already said what the dogs that we've invested in my portfolio. They're both small dogs. As Verizon and Walgreens, our top dog equals 333 English ordinal. I think that's important, and I believe these stocks moving forward will shake themselves out and will grow in price. VZ, WBA, our best dogs of Dow in year 2023. 331 English ordinal, which is just the reverse of 133. But you see in the English reduction, again, the top investment numbers popping up, 133 English reduction. So again, VZ, WBA, our best dogs of Dow in year 2023. That's why I'm investing in them. The Gematria is telling me so. Best two dogs of Dow Jones in 2023, VZ and WBA, 137 English reduction, 33rd prime. Best yielding 2023 Dow Jones dogs, VZ, WBA, 137 reduction, 1,377 in Satanic. Now, this is where when you might see this, there's an extra 7 there. Really, I see that as like just an extended version of 137. Some people may not see it like that. It's all what you see, you perceive yourself when decoding. It's not a perfect science. Some might not view that as a good decode, but I like seeing things like that. It's just a big 137 in my case, how I see it. So there's a lot of Gematria saying that Verizon and Walgreens are the ones to choose from the Dow in this strategy. So let's get into the fundamentals of Walgreens. WBA, Walgreens Boots Alliance. It's a dividend. Right now, I have 3 shares. The ending price was about $29.80. I have my share price right now is $29.65. They're under $30. In this case, I'm pretty confident that it's under $30 right now. And as you see with the chart, it's pretty much reaching historical bottom lows right now. We're talking, it hasn't seen $30 since 2013, 2010, before it really started making its run. So it's really at the bottom of its chart right now. And I think long term, this is a good opportunity to get in. Its industry is retail pharmacy, pharmaceuticals. Headquarters, Deerfield, Illinois. Its PE ratio is a negative 7.97 right now. So as you know, its PE ratio is negative right now. It's because it's been on a downturn, and so its earnings has been, its price has been lower than its actual earnings. So some people might see a PE ratio saying, okay, maybe it's an underperformer, maybe the company's going bankrupt, but not in this case. So I think it's just an opportunity. Now, when it comes to debt to equity, it's actually kind of high. Most cases, especially for dividend companies, I like to keep the debt to equity under 2, mostly under 1. So, you might ask, okay, why in this case are you making an exception for Walgreens to have a debt to equity of 3.28, which is really high, and you're going off your normal strategy? Well, in this case, when we get into the next slide, I'll show you they've taken out a lot of debt to grow into their next portion of businesses. They've been in retail pharmacies for nearly 100 years, and now they're trying to get in another segment of the health industry, but that takes a lot of money. The dividend yield is 6.6%, 6.60%, so it's pretty high, and I like it. Walgreens Boots Alliance, great buy, 331 English Ordinal. WBA is a great buy under $30 in 2023, 330 English Ordinal, 33. Retail pharmacy and primary care, 133 English reduction, and that's going to be the focus on the next slide is the primary care portion. WBA is a retail pharmacy growing into primary care, 222 English reduction. 222 is another major number I like to work with. I like working with repeating angel type numbers. So, okay, why? This is actually the fundamentals of Walgreens Boots Alliance. Why are we getting in this even though they have a high debt to equity ratio? Well, first, the company acquired Village MD and CareCentrix over the past several years, giving it offerings for primary and specialty care and specialty pharmacy needs, and even home services. So I believe Walgreens and its management right now believes that, with the online that's happening, retail stores aren't going to have as much as much influence moving forward. Amazon's taking over. Everybody has these online stores now. They'll still have brick and mortar stores, but they're trying to figure out a way, how can we stay in the game? And how they can stay in the game is they understand that the population is getting older. Healthcare is still going to be needed. So how can they get into this? So that's why they bought those two companies. These two companies focus on primary and specialty care. So they're going to be able to go to their patients' houses, give them plans, how to move forward. They give them diagnoses in their house, and they can work with them on a more personal basis. So it's more of an ecosystem. So say Village MD, person goes to your house, CareCentrix, they go to your house, they give you a plan on how you can, help yourself moving forward, but you still have to go to Walgreens to get your prescriptions and things along those lines. So they're trying to have a more ecosystem base. Now, when it comes to their assets and their net equity, their liabilities, so right now, their assets is $98.6 billion. Their total liabilities are $69 billion. So the net equity right now is $29.5 billion. Their shares outstanding, they have a huge float, but it's a multi-billion dollar business. It's a mega business. It's an 863 million float. So the net equity divided by the shares outstanding, their fair value is going to be 34.19. So again, you see the discrepancy there. The price is below $30, but the fair value, when you take it to their net equity divided by their shares outstanding, it's $34.19. And you have to understand, in the stock market, most stocks is positive and forward-looking. So these are bare bottom prices. Most stocks in the market, they don't even trade close to their fair value. They're usually way over their fair values. So if I'm getting a fair value just off their net equity at $34.19, if we go back to their slide, as you see, not too long ago, the stock was trading at 60. So in a perfect case scenario, we get in under 30, and that's a double up for a big company down the road if they know what they're doing. And so that's the opportunity there for Walgreens. WBA, primary healthcare, 333 reverse ordinal. WBA, growth to primary healthcare, 333 English ordinal. We love seeing that. WBA acquiring Village MD and CareCentrix, 330 English ordinal. Again, all these 33s, powerful. So I believe in their plan. It's going to take a little bit. Seeing these dips in price, is not a bad thing. It's just an opportunity. So going to the next Dow of the dog. Verizon Communications, Inc., VZ. It's a dividend. It's in telecommunications. Headquarters is in New York. The PE ratio is 6.6x. The debt to equity is 1.49, so it's a little bit more in line. It's still on the high side, but it's more in line of what I like to see for my dividends. And the dividend yield is 7.43%. And as you see, again, with the chart right now it's sitting at 34. It's about 34 bucks, but in normal cases it's at 60. So again, this is another big mega cap opportunity to double in price if it gets things situated out. And on that next slide, we'll see right now they've been in the news. Right now, Verizon, AT&T, a lot of the telecommunications companies are not having good news come out about them right now because of the lead cables with their old lines and stuff like that. So they have to spend money to refurbish these lines to get them more health friendly. And again, it's the news. I don't know what's true and what's not. It could just be Wall Street trying to get better prices to get shares of the company. So I just see it more as an opportunity. VZ stock is best telecom stock, and VZ is better than AT&T and T-Mobile. So you see this stuff. So VZ is better than, messed up on that. Don't worry about that. So VZ stock is best telecom stock, 331 English ordinal, 88 English reduction, and 146 reverse reduction. And we have Verizon 2023, number one telecom stock, 331 English ordinal. And so it's telling off the bat, Verizon is the best telecom stock. I have a Verizon for my plan. AT&T, bad management, and I think long term they will be okay. VZ stock, good buy in 2023, 2,222 in the Latin cipher. Again, I like to see those repeating numbers for the 2s and the 3s. So when getting into their fundamentals, we'll see that they have assets. They have $379 billion of assets. Their total liabilities is $283 billion. So that means their net equity is $96 billion. Shares outstanding is 4.2 billion. So it's even larger float than Walgreens. But again, this is a major company. Their net equity, and again, this is when it comes into, you have to be flexible when it comes to your calculations, because if you're rigid in what you see, you'll miss opportunities. The net equity to the shares outstanding means the fair value is at $22.97. And you might say, okay, well, that means there's a discrepancy to the downside for where the stock is right now. Of course, it's at 34 bucks. If the fair value just to the net equity, if you look at that, is 22 bucks, yeah, there is a discrepancy. But again, you have to understand, why is there a discrepancy there? Why are their liabilities so high right now? And so the liabilities are high is because they had to spend a lot of money to get the 5G rollout going. In the conspiracy community, we understand not a lot of people are high on 5G. I understand that, but we live in the world, we live in the matrix. I don't think there's really a good way around 5G. It's going to be rolling out regardless. They've been spending a lot of money on 5G, because they have to get the situation, their stations correct. Verizon is known to have the best coverage around the world. So if they want to keep that, advantage, they have to spend a lot of money to keep that when 5G is fully intact. So they're spending a lot of money on 5G. And so from the Seeking Alpha article, this is what it says in its conclusion. Overall, Verizon's steady lines of business, solid revenue mix, and focus on core segments provide the stability that the company needs to work its way out of its net debt pile. And so that they know what they have to do. They just have to do it. And right now, these are the subscriber bases for the top 3 companies. Facilities-based service providers by subscriber count in the U.S. Each active SIM card is considered a subscriber. So right now, AT&T still has the most subscribers, as most users right now at 217 million in Q4 of 2022. But Verizon is in second, 143.3 million. T-Mobile at 113.6 million. And so when we're looking at the Gematria, we have Verizon stock, 5G investment, 330 English ordinal. We like seeing that. 5G debt is good for VZ long term, 303 English ordinal. We have that 33. Long term, I think they'll be fine. Again, I talked about the toxic lead situation. VZ will lead telecom after COVID era, 137 English reduction. Toxic lead cable news is Verizon buy, 137 English reduction as well. Toxic lead cable FUD, fear, uncertainty, doubt is buy for telecom, 137 English reduction, all the 33rd prime. All right, and so this is the opportunity. Again, we can only go off what the news is saying. I don't know if there's a real lead problem with the lead cables or not. All I know is that they're going to figure it out, and I think this is an opportunity for Wall Street to produce FUD to get people out of their shares. I think people, if they believe Verizon is going anywhere in the next 20 to 30 years and not be one of the top three cell phone providers or network providers, I think they're kidding themselves. And so this is why we're getting in now. And then right now I put also subtract. So this is where the fair value gets in. I want to go over. This is where you have to have flexibility. So if you take out the long-term debt from Verizon, so I use this strategy as well. Sometimes, depending on what the debt is for a company, you could take out their long-term debt. The reason why you could take out their long-term debt is because they don't have to pay it anytime soon. So it's not a problem that's current that they have to deal with right now. So it's not like they have to make payments on it right now, or if they do have to make payments, it's at a low interest rate. So I take their assets minus their long-term debt, which is 137 billion, which equals $242 billion. So you divide that by their shares outstanding. The fair value without their long-term liability debt, only with their current, is a share price of $57.63. So that's where the opportunity is on the positive side. They don't have to deal with their long-term debts right now. It's for 5G. We know why they have those debts. They're going to figure it out. So you take that off the equation, you put that back on, and you have $57.63. So that's, again, almost a double up for Verizon when they get their things situated. And for the last decode, subtract long-term liabilities, fair valuation for realistic and optimistic calculation 330 English reduction. So those are the two Dow of the dogs, Walgreens and Verizon. I think these are potential double up opportunities for the long term because I believe they're going to be figuring their stuff out. They didn't take out debt for strategies that I don't believe won't work. I think both are good, realistic, pragmatic strategies for where the world's going. For Walgreens, people are getting older. They need more primary care. Why not make it more personal? Why not have a more ecosystem with that? For Verizon, 5G is the future. They have to spend on 5G. So if they want to keep their top spot, you got to spend money. And so let's finally get into the data cap divvy pack before we get into any questions or answers, and we'll finish up this conference call for today. So I'm very happy about the portfolio right now and where it's going since we started this in March. So off the bat, July 2023, the current month, the total positive, the profit we are in for the positive side of stocks is $245.23, and we only have 3 stocks in the red right now at a loss. So it's only $14.77, which means we have an overall net profit of $230.46. And so these are some of our top stocks right now. AND, we're up 30% on that right now. APAM, 22. Honda, 20. 21. AOS, 20%. Comcast, almost 20%. SXC, 18%. That's the coal company I added last month, I told people about. We're already up 18%. LNC, this is one of the old stocks. This is the stock I have the most equity in the portfolio. I got in at like $30-something I was buying all the way down under 20. Now it's sitting at 27, and we're up 15% right now, and it's a stronghold in the portfolio. BHP 10%, ICL 7%, Coca-Cola steady, a couple dollars here and there, and as you see moving forward. But we have, out of the 17 dividend stocks right now, we have 14 in the profit. And so on the loss side, which they're not even big losses, we have UAN, which is we're down 3.5%, but we're only down $11. And this is the big stock I have with a cost per share of $93. But this is a stock that has like a 30-something% dividend. So we're not necessarily in it per se for growth of price. We'd like to see a growth of price, but we're also in it for the hefty dividend it pays out. So every quarter we're getting almost like, $10, $15 a share. Like it's pretty crazy. So that's why we're in it. We're not really worried about it being down $11 because we get that in the dividend easily. We have O, which is our REIT, our real estate dividend. It's only down $3. I think it's the second largest holding in my portfolio. We're only down $3, and it's a monthly dividend. So over time, it's going to even out. Then we have gold. It's down 50 cents right now, and I'm not too worried. I don't know if I'm going to be adding much to the gold position right now. I just kind of like to monitor it. And the thing about it's Barrick Gold, the company. The thing about gold stocks, when the stock market is doing well, precious metals normally inverse that and don't do as well. Right now, the stock market's kind of on a bull run, so that's why it's not doing too hot. But the precious metal sector is really manipulated, so I don't really think that the price for gold is going to shoot up high at any point. But I'd like to have just a little bit of exposure just to see where the market's going. And so right now we have almost about $3,000 in the data cap dividend pack. If the market does start to take a turn downward, we'll start to see where we can add to the position. And as me and you have talked about, Paula, you've already sold AOS. I'm thinking about potentially selling AOS just because I've only had one share in it. It's up pretty high right now. And the dividend, it's only about like 1%. The PE ratio is kind of out of whack. It's over 40 something. And I just think if there's an opportunity to get profit and maybe put AOS's profits into Walgreens, Verizon, a smaller dog in the Dow or somewhere else, it might prove to be a better gain in the future. I haven't done it yet. The earnings came out last week and it was pretty good. But I'm probably going to wait until that next dividend payout, the 15th of August. So that's the dividend pack. Overall, it's been doing great. Been happy about it. So we'll see what happens in August for that conference call. And now, questions, answers. Do you have any questions, Paula, or anything like that before we end this call?
I don't think so.
Mm-hmm.
It was helpful. It's really helpful to listen about Walgreens and Verizon because I don't have any of the dogs, and I think that maybe getting a few shares in each one of them, and even if it goes down,
Mm-hmm.
you just hold on to it and you buy more.
Yeah. Mm-hmm.
It's a win.
It is a win. Well, yeah, it's a win at these low prices. When you look at historically where they're at, it's tough. Like they're at 10-year lows, 15-year lows, and these are companies that really aren't going out of business. Who's going to take them out? So I think they're more of opportunities than anything else. So again, and they're $30, so $100 gets you 3 shares of either of those companies. Low risk, high reward potential for a double up is what I see in the next couple of years. So definitely something to think about.
Yeah, I'm trying to think about a little bit long term, even though I don't feel like I'm in it for long term at all. But because I have a daughter and stuff like that, and I'm just trying to see where things kind of land, and she could always inherit these long-term goals or whatever. And I'm just trying to think larger ever since I got in with you, and it's been good. Like I'm looking at like the profit I've made on coin. Now, in a few months it could go down the tubes. But I feel like if it goes down the tubes, at least I have like 10 shares of it.
Yeah.
I'll just buy lower, and that means that my costs,
your cost per share goes down, but that's good. And you have to think about coin. How many other crypto exchanges are really going to compete with coin long term?
Right, exactly.
Yeah. Like it's like a matrix stock. Like I don't really think Wall Street wants anyone else in something else besides coin. So I feel like long term that's a good one. And you call that out. I think that's a double up for you because you got up in like 40, 50 range, and it's over $100 right now.
Right, and it went down this week. I mean, I lost some of it, but I'm still in huge profit. I'm still double. Yeah,
that's awesome.
In like 3 months.
And that's a big market cap type of company, so you don't see that every day, and so that you should.
I want to do some Gematria on it. So because I do think that Coinbase is going to be the bank. It's going to be a crypto bank. So.
And I don't have Coinbase. I need to set up an account, but don't they have like fees? Like so when like you buy a crypto, like they have like for certain fees to get the coins and stuff like that. Now for the user, obviously you don't want a whole lot of fees, but for the business side, that's where people make their money. That's where the business makes their money. So when you're looking at like a business perspective, if they're the only show in town, and if you want to get in that type of game, and they're gonna hit you with fees here and there, that's a money maker right there.
Right. Well, I don't buy my stuff from Coinbase anymore. I'm done. Yeah.
Where do you get what do you use?
I buy my crypto on, which I haven't been doing for quite a while. I love Uphold. Their fees are less than Coinbase, and of course I have a crypto IRA, and their fees are really low. And anyway, that's where I get it. I'm very excited about the I Trust Capital because they're going to get 5 or 6 more cryptos in, and I think they're going to get Quant, and Quant's
it's your baby.
Quant, yeah. I think Quant's going to be huge because it's interledger and how all the crypto interchanges, and I think it's going to be really huge. And if you get a Roth IRA, then you're not paying taxes on it. So it's like
I have to look into that one. I have been seeing a lot of people talk about Quant lately. I haven't bought crypto in a long. I did have a Binance USA account, but then they switched where you couldn't use USD anymore. You could only exchange crypto. So I haven't touched it. I just have my Cardano staking on what's that URI. So I just set it, forget it there. But I need to start figuring out what other coins I could possibly get into just to to stay in the game. With Fed now coming out, all of these things coming down the pipe with the government, I think it's getting to that crunch time soon. Also with XRP finally winning their case, is getting to crunch time where the controllers are going to start consolidating on where they see things going. So it's not going to be the Wild West much more going forward for crypto.
Right. I Trust Capital just they had XRP and then they didn't with the lawsuit, but now it's back on. And I mean, I have a big bag of XRP. I do, and when I liquidate it, I'm going to have to pay a lot of taxes on it.
Yeah.
But it is what it is. But now, when I liquidate it, it's kind of tricky, but I have some money that will go on I Trust Capital
Mhm.
that I can invest in XRP.
Mhm.
And so I won't invest in XRP on any of the exchanges. And
Mhm.
I also have a U.S. Binance account too. And
Mhm.
you know, it's kind of a bummer, but I don't have a whole lot on that.
Mhm.
So I just mainly use Uphold and I Trust Capital for buying. But you know, Coinbase, I'm just gonna say it. Coinbase you might be able at the September, October, get Coinbase stock for 25, $30.
That's a good
If you
buy, especially with the IPOs at like 500. So I have to keep that in mind. And I feel like that could be like a dividend play in the future as well. You know, it's like it's going to be one of those big companies. So it's definitely something I'm gonna put on my watch list, and hopefully I can
yeah,
get into profit like you.
good. Yeah.
But,
All right. I'm
uh,
sorry more than join us today.
yeah, you know, I was hoping, what's his face, off top world came. You know, I was, really trying this month to, market it, get out because I feel like, it is really valuable information. You know, even I still get videos out of this, but if the goal for me is if I can get more people together under one roof in a more personal manner, it just makes everyone stronger. But it's still a process. It's a problem. I'm gonna still try to keep figuring out. We'll figure it out. All we can do is what we can control. If we keep making money and people see me and you keep making money, they're gonna want to be a part of it eventually. So that's what we can control.
Exactly.
But all right,
Yeah.
Paula, you have a good rest of
You
your
have a
day.
great.
Um, you know,
Thank you.
I'll see you back in the markets tomorrow on Discord and stuff, so we can get after it. So
All right. Sounds great. You have a great day.
you
Bye.
too. Bye bye.